So in the past, I used to take trades that were perfectly good winners, and what would happen is the stock would not follow through as much as I was hoping it would. It might arrive at target one and maybe eventually arrive to another area where I was looking to take profits, but immediately reject. And what would happen is the stock would start to retrace, go against me, and as a result, it would hit break even. I would hesitate and not basically exit the trade or decide what I should do next. And through the hesitation, a perfectly good winner would end up turning into a loser. So in this video, I want to describe a little bit about this problem and a solution that's really helped me address it. So in this example, I have the chart for Tesla. It's a 2-minute chart. This is a perfect example to show you because it showcases and demonstrates how a stock can go in your favor and then follow through a little bit further and then reverse completely on you, making basically 100% move back into your stop loss and actually further down. So personally for me, this has been a huge problem in the past and I had to do something about it. I had to address it. So let's break down what the problem is that we're seeing on this chart, sort of dissected, and then we can go into understanding, what are some possible solutions we can implement. And these solutions have helped me immensely, and I hope they help you because there's really no logical reason to turn a winner into a loser. And so this video should help you sort of address this problem. So this is a chart of Tesla on the 2-minute, and I've highlighted 2 areas where I'm looking to basically exit if the stock goes against me. This is the stop loss. An entry would be here around 416. If you don't know what this pattern is, it's sort of looking like it's about to break the high a day, which is right around here, around 418. But it's also a buy setup or early stage breakout. Basically, it's about 50% retracement. It's starting to turn and hold above the 20 moving average, and it's about 50% because the pivot right here to the distance right here is basically the center point, about 50%, and that's what you're typically looking for a buy setup or breakout. Some even call these flags. Either way, it's a direction that we're hoping to see the stock move, which is towards the upside, so we're going long. So by entering here around 416, setting a stop loss around 414.50, 415, that sort of area where this red line is, that's where we're looking to exit and essentially exit the stock because it's going to invalidate, has a likelihood of going further against us. And this blue line here is potentially target. This target is set a little bit higher than the original target would be, just around 418. This is the high of this pivot because the stock could still go here and reverse. But if we can get up to 420, this would be the ideal target. So as you can see on this chart, Tesla basically showcased this candle here, the green candle, which is a doji, and then immediately pulled back and then started to move up and rally up. So if you got an entry here around 416, whether you're trading shares or whether you're trading options, immediately the stock is going in your direction, is testing this pivot here, and then starts to break a whole number around 418. This is all good, and these are the type of indications you want to see that there is follow through. So as the stock starts to move in its favor beyond this pivot, breaks the high day of 418 and starts to move towards 419, that's when we start seeing some sort of like concerns. The price actions start to slow down. There's some top wicks here. And then this red candle here, this is where it starts to become more concerning that possibly sellers are stepping in. So what happened typically with this is it didn't quite reach 420. And if you're manually trading, if you're basically relying on order entries, or if you're basically intervening without having your orders set, or even if you had your order set at 420, it's not going to get hit. So you would basically miss the opportunity to take the profits, even though it only went up to 419.58 and didn't reach 420. And then it started to reverse here, as we can see. And it didn't just reverse back to this pivot and hold to show some strength around 418. It went 100% back to our stop loss, sort of started stalling, and then further moved down. So whether you're exiting through an order or you're exiting manually, this type of situation can happen in the stock market, and it's happened to me many times before, and it can be quite frustrating because the stock moves in your favor. You don't really get a chance to take profits because you were hoping for a bigger move, and then it goes against you and it basically stops you out. So here's the major problem with something like this, and this is something I have been implementing in my trading because it is very important to think about this principle. When you're up in profits for your trade, it's broken structure, it's breaking the high a day, that's basically confirmation that the stock should not reverse 100% and hit your stop loss. That's a major red flag if it does occur. And by being up in terms of profits on the trade, for example, with options, this could possibly see like a 30 cent to 50 cent move in your favor on the premiums, maybe even up to 70 cents or $1. I mean, you're risking, let's say, 30 cents per contract or 50 cents per contract. If it stops you out, you're not actually still risking that 1R or the 50 cents per contract. You're not risking all that profit that you had as well. So what you want to think about in this process is, by having some profit and some cushion, you're now giving away all of those profits if you don't take some actions on protecting your gains or at least raising your stop. So that's kind of a hint as to what I started doing. I started to understand, okay, I experienced a lot of frustration when the stock does not go all the way to my target. It retraces and goes to break even. What should I do? What's the highest priority thing? So the first thing that I do is immediately when the stock goes in my favor, a significant amount, over back testing and reviewing all of my footage, I've narrowed that number down to about 30 cents per contract. 30 cents per contract on a 2-minute chart is a pretty healthy move on a premium. And if you're trading shares, $1 move in your favor, $2 moves in your favor, especially if you only have a $1 stop loss, that's a pretty healthy move in your favor, especially if you're a scalper or a day trader just trading the first hour to 1.5 hours of market open. You want to take those moves, you want to take your profits, you want to be able to get many wins under your belt because there's a lot of short-term volatility that occurs. So when the stock reaches that specific point, which I have determined helps me determine that, hey, look, this is a good area that something should not happen against me. And if it does, it's a major red flag. So what am I going to do first? My first solution is to actually scale out half of my position. By scaling out half of my position, I've automatically locked in gains. Now that I've locked in gains, what's the second thing that I would do? I would basically ensure that, okay, if this trade goes against me, away from where I am, the remainder half of the position that I have, what am I going to do with it? I decided what helps me is to actually raise my stop directly to break even. So I would raise it to a level where if the stock goes in my favor, I'm basically sitting on the sidelines with a free trade for the remainder half of my position. This scaling out and raising your stop loss for me, for break even, has helped me stay more relaxed while in the trade. If the trade goes in my direction, which it likely should, then I'm still, able to hold through and start to capitalize on a larger move. And in addition to that, if it goes against me, I lose nothing on the trade. Now, you'll have to assess what works best for you. I really recommend, recording your trading videos, your execution, understanding what kind of instruments you're trading with, whether you're doing stocks, options, futures, whatever that is for you. Understand what are your typical entries, what are your typical stop losses, which time frames you're trading in, how much follow through do you usually expect, and if a follow through happens where stock breaks out of structure, find out if that's a good indication for you to say, hey, look, if something goes against me, it's a major red flag. This trade should automatically get me out of break even. I've already locked in half gains. I've locked in a third. Maybe I've locked in 80% of my position. Because what's happened in the past with me is that a lot of these winners, I would record them as losers, full R, but my thinking was, hey, look, I only lost 1 R. But after some, thinking about this, what's really going to affect me when it comes to future trades? Am I going to keep letting these winners turn to losers? Were these actually winners? What am I doing wrong? It's in the execution. And in the execution, I have to do something by taking some of the position off, raising a stop loss to a specific amount that I feel comfortable enough that it's wiggle room if it's necessary, but also if the trade goes back to break even, usually that's not a good sign. So I've implemented those two solutions to make sure that I stay in good trades and I get out of bad trades. But more importantly, if this trade goes in my direction, I've locked in some profits and now I can sit and wait for the remainder of the trade to work out. So what would have happened ideally in this situation is if I'm noticing topping tails, that's usually a red flag. We're also up 3 bars. I've raised my stop to break even. Psychologically, I'm also more likely to now take profits for the remainder half of the position. position. I know that 420 might not reach. I may look at other, charts like the market, QQQ, SPY to see, hey, look, are we still seeing follow through on this? Have I captured most of the move? How's the volume? And look, as the volume is peaking out, and then on this red candle, there's not as much volume. So I can start putting more of the pieces together and start critically thinking about what I should do next for the remainder half of the position. If you gain value from this video, let me know in the comments below. Let me know also if you have any trade examples where you've basically turned a winner into a loser. I'm happy to provide some feedback on that, give my sort of feedback as to what I would have done if I was in this trade. If you found value in this video, make sure to like and subscribe.